Hello. How are you all doing? I hope you're doing great. Welcome back once again. Today, I want to take a calm, perspective driven look at the market. Because honestly, I believe we're in one of those moments where almost anything could happen. And I'm not saying that as a cliche. I genuinely think we're at a point where the market is deciding whether it's preparing for something very positive or something much more complicated. So, with that said, let's get started. If we look at the Bitcoin chart calmly, you can see it on screen, the first thing I notice is not a clear trend. I don't see a decisive market. What I see instead is a zone of equilibrium, almost a technical draw between buyers and sellers. And in Bitcoin, this usually doesn't last very long. When price spends too much time consolidating, it often means the market is building energy for a significant move. And here's something very important, at least from my perspective. It's not about guessing where price will go next. It's about understanding what needs to happen for us to know that the market has already made its decision. There are very clear levels. As long as certain supports hold, the bullish scenario remains completely alive, and this could simply be a pause within a larger trend. But if those levels start breaking decisively, then the context changes, and we need to begin considering a more bearish scenario without denial and without emotional attachment. Because one thing I always try to avoid is falling in love with a narrative. The market has no obligation to do what we want it to do. Bitcoin also has a very particular personality. It spends long periods looking boring, like the phase we're experiencing right now, only to suddenly move with extreme violence, leaving most participants behind. And this almost always happens when the majority of the market believes it already knows what's going to happen. That's why these sideways phases are not irrelevant, quite the opposite. They are usually periods where liquidity builds up, false signals appear, and many traders enter too early. Now, this is where I want to widen the lens a bit, because Bitcoin doesn't exist in isolation. And I think one of the biggest mistakes right now is analyzing only the chart without paying attention to what's happening in the global financial system. And here's something that honestly surprises me. I don't know how Bitcoin hasn't dropped harder while the MOVE index has been rising so aggressively. For those unfamiliar, the MOVE index measures the implied volatility of US Treasury bonds, typically across the 2, 5, 10, and 30-year maturities. In simple terms, is basically the VIX of the bond market. And when this indicator spikes, is not a minor signal. It reflects real stress at the core of the financial system. The reality is that Bitcoin responds directly or indirectly to global liquidity. When money flows and risk appetite increases, Bitcoin tends to breathe. When liquidity contracts, the crypto market feels it quickly. So the fact that bond volatility is rising sharply while Bitcoin remains relatively stable is not trivial. It's a divergence that, at the very least, deserves our attention. If we look across different markets, an interesting pattern begins to emerge. It feels as if certain prices, especially in the energy sector, are being held under enormous pressure. Not because everything is balanced, but because large market participants are trying to maintain extremely stretched positions, and this leads us to something fundamental. When financial stress appears, the system doesn't collapse all at once. It happens in layers. When margin calls arrive, large funds need immediate liquidity, but they don't sell everything at once. There's a clear hierarchy in what gets sold first. First, the most speculative and volatile assets fall. Then, stress appears in credit markets and lower quality assets. Later, we see sharp movements in commodities. And finally, pressure reaches bonds, which normally act as the system's last defensive line. Each phase doesn't necessarily represent a structural economic shift. It's a search for liquidity, the system trying to stabilize itself by selling less critical assets to protect the most sensitive ones. And here's the key point. When even bonds begin to show stress, something we can infer from the rising move index, it means the margin for error is shrinking significantly. There's simply less left to sell without affecting the core of the market. If that pressure continues, the next major source of liquidity would be the broader equity market, and at that stage, we wouldn't be talking about a normal correction anymore, but rather widespread selling to cover positions. In environments like this, something paradoxical happens. Just when there's nothing left to sell, assets that were previously contained can move with extreme violence, not because of economic growth, but because of forced liquidations and rapid system adjustments. That's why Bitcoin's current behavior makes much more sense when viewed through the lens of global liquidity. It doesn't look like random indecision, it looks like a pause within a financial system that is recalibrating. And that completely changes the approach. Right now, in my opinion, it doesn't make sense to be extremely bullish or extremely bearish. The correct approach is to be prepared for both scenarios. One of the most common mistakes is trying to anticipate the market. We want to catch the exact bottom or the perfect top, but the market rarely rewards impatience. Waiting for confirmation may feel less exciting, but it's usually far more rational and sustainable. And something important, a strong correction doesn't necessarily mean everything is over. Historically, Bitcoin has experienced deep pullbacks even during massive bull cycles. It's part of its nature. So instead of asking whether the best or the worst is coming, I prefer to ask, what is global liquidity really telling us right now? My personal approach is simple: observe, adapt, and remain flexible. Our advantage isn't always being right. It's knowing how to change when conditions change. We're in a moment where patience may be more valuable than action, where waiting is also an active decision. And that's it for today's analysis. If I had to summarize everything in one idea, it would be this. This is not a moment to bet blindly, it's a moment to prepare. Prepare for the best, but also for the worst. Because surviving in this market isn't about predicting the future. It's about being ready for whatever scenario the market decides to present. Now, I want to hear your opinion, as always, down in the comments. Do you think Bitcoin is accumulating before a major move? Or are we seeing the first real signs of financial stress in the system? I'll be reading all your comments. Take care, stay sharp, and I'll see you in the next video. Cold mind. Goodbye.